Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Wednesday, July the 17th. The year's 2024. Let's talk trading. Trading the edge with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, we've got a very interesting setup here, considering it hit that and exceeded that 1.30 that you talked about the pound would do last week.
Yeah, it certainly did, and we're honing in right now where my Fibonacci that I talked about in that video sits at 131.40 roughly, and so we're a long ways away from it, but are we? I mean, we're 117 pips away from that. From that right now, currently, we're 117 pips away, and today we got to within. Let me just go measure that real quick, but we got to within 99 pips of it. So it's not, when you think about it, it really isn't that far away. We get a couple more big up days, you're there. My point being is that it was sitting out there. I talked about this yesterday in the video a little bit. I think I said something along the lines. I thought when I first started hearing about TRO and drawing a line in the sand and just literally taking a trade in the direction of the candle color, and I thought he was nuts or whatever. But the reality is, if we would have done that, back, I mean, there's so many lines that you could have done this at, but like if you did it at the 61.8, good grief, you'd be up right now 300 pips, it would have taken you about a week and a half to get there, but, that's not a bad little haul, so it does work. It's just the thing is, do you have your money management in place, your risk management in place to protect yourself? That's what it really comes down to. But, that's trading. So my bias overall, if you would ask me, is probably still going to go up. It's still going to want to try to get up to that 31.40 area, and there's, like I said, there's a ways to go there, but it's a bias. Now, the thing is, we've moved 84 pips today. That's what our smart range is for the day. We have a tiny, tiny wick on the bottom side, so the vast majority of the 84 pips was in the upward direction, and it just shows you how small ranges have been as of late, because at least on my chart, that puts us in the 80th percentile. That's pretty incredible that 84 pips puts you in the 80th percentile. In the old days, the 80th percentile would have been closer to, 95, 100 pips, something along those lines.
Oh, you're in the 80th percentile. How many days back are you looking?
I'm looking back 20 days.
Oh,
I'm always looking back.
Okay. Yeah, because I've got 250, and that puts us in the 62 percentile. 84 pips.
So mine is already, taking into account the fact that we've had this major shift, in a market of much smaller, daily candles. But in any event, we know that, and we know that the pound likes to go and run in a particular direction, and it likes to go and suck back down into another direction, to kind of, I don't want to say it wants to get back all the way to the open. It doesn't, but it does like to go back towards the middle a little bit. And we talked a little bit, a couple times, we've talked about this idea of trading the edge. Well, I'm not sure what screen you got up, but if you could put up a 1-minute candle chart, you'll see that over the first 20 minutes of this particular hour and the last roughly 15-20 minutes of the previous hour, we see that there was a nice little range that got built up there of 35 from the 30.35 down to roughly the 30.28 or so, and it just was going. It was oscillating back and forth in that area. And so that, to me, I like to go and draw a rectangle on the screen. So I was already done trading, so I didn't do this. But if I was still trading, I would have drawn a rectangle around all those candles, all 1 minute candles. I would have pulled up a 5 minute candle and say, does that fall into it? And it would. And then I said, oh, look at that. We got a really nice, edge here. It's only maybe about 5 pips or 6 pips or 7 pips wide. If it goes and breaks this area, there's a chance to make some pips. And so, lo and behold, it goes and puts in a flip-flop box, up at about 34 before we had all those candles that went down. And you'd say, well, that's hindsight. Yeah, it's hindsight. I'm looking at it now. But the thing is, once it broke that 28 area, that's where I would have taken the trade. So on, let's see, 1, 2, 3. Actually, why not use the machine to don't count down candles for me? That's what it's for, right? So candle 13, which is the last candle that closed above the 30, okay? If you notice, it had a wick on it. It did break the lower area, and I would have gone on the next candle after that. I would have entered as soon as it broke that wick, and could have picked up, 6 pips on that, which would have been a really nice little trade. And somebody's going to go and say, yeah, but look at all the time you had to go and wait for a trade. Yep, that's exactly right. You had to wait all that time for a trade because that's what it takes. You got to sit. 90% of trading is just waiting, sitting and waiting.
More like 99%.
Yeah, exactly. Now, if you look left into the previous hour, again on the 1 minute candle, okay, you'll see that we put in, a support area or I like to call it a shelf down at 30.21. Okay, and look what price did. We ran all those candles in, ran down 1, 2, 3, 4, 5, 6, 7 candles in a row, right? And first of all, we don't get 7 candles in a row. It doesn't happen very often. Obviously, it happens probably just about every day, but it's something that doesn't happen very often. And then when it gets down to that area, and it missed hitting that area by less than a pip, by like half of a pip or so, we got a flip-flop box. Okay, but what happened was it never broke the highs. So that's telling me, gotta be cautious here, because it's not breaking the higher highs. Then finally we got another flip-flop box, 2 or 3 candles later. So that flip-flop candle box would have been at candle 8. Okay, so a candle 7, you broke the higher high on that, you go in there, and then you could have picked up 3 pips. So if you stayed in, you would have gone and actually been back underwater again, but you would have gotten another flip-flop box, and you could have entered again at, 30.27, roughly, okay? But between the two of those, you could have, if you were good and you were lucky, you could have picked up 4.5 pips on one trade, and you could have gone and picked up roughly 7 pips on another trade. And then you say, well, you can't pinpoint, those exact entries and those exact exits. Well, I can pinpoint where I want to enter, but you're right, I can't pinpoint my exit. But what I would have done is, oh, look, that right there at 30.33, is that right? No, 30.32. Notice that was the open of the new H4 candle. I knew some type of reaction is going to happen there because that's what it does. It's going to get there and it's either going to blast through it or it's going to hit it like a wall. Well, this time it hit it like a wall. So what do? I put my exit somewhere around, 30, 31, something like that. And if I would have done that, the second trade that I would have been in, I would have picked up, 4.5 pips in the first trade I would have been in. I would have picked up 6.5 pips. Not a bad day. So you got, between those 2 trades, you've got 11 pips or something, maybe almost 12 pips. And if you wanted to go and say, hey, I really do think it's going to break out of this area, you want to take the chance, maybe take some money off the table, and you stay in the trade, well, you'd be up even more now. So you got those are the things that you have to calculate on your own and see how it fits into your risk management. But that's what we're talking about with trading on the edge. What you're doing is you're looking for those edges. Some people call it support and resistance. Maybe it's a different word. Maybe it's just a different way of looking at it. But all I'm doing is I'm saying, okay, I know price is going to do something here. Okay.
Well, you
Um,
think price is going to, or you anticipate price is going to do something
well,
there.
well, I know it's going to do something, and here's the reason why. Because let me caveat that. I know it's going to do something there, and what it's going to do there is either going to stop, okay, and reject it, or it's going to blast through it. It's got to do one or the other, you know. And that's, you could probably say that about every single candle. But my point is, I knew that that there's going to be some type of decision that the organism of traders, the conglomerate of traders are going to make a decision there. And either the decision is we can't go any further, or the decision is where this doesn't matter anymore. And so, and the reason why I say I know that there's going to be something there, I know that it's going to be some type of decision point that's going to be made there. Well, guess what? I'm going to get out. For me personally, I'm going to get out before that decision has to be made, because that keeps me safe. And if I'm up, a bunch of pips, like, if I had taken those two trades, I would have been up 11 pips or so. For me, that's a good day. Take 11 pips, that's 2/3 of my goal for the day. Why do I want to take now the decision that the problem is when you stay in a trade like that. For me, this is my thinking, and everybody's got to think this out on their own. But my thinking on it is, I got 2/3 of what I need to make for the day right now. If I go and just take it out right now, and to me, it's not worth the additional risk to go and see if it's going to go and run, run up even more, where I could get more. I mean, it's just not worth it for me. I'd rather just get out, put the money in the bank, and be happy with it, and then look for the next trade to come along. That's me, but that's my risk aversion going in there. I have a real serious problem. Personally, I have a serious problem with my personality. When things go against me pretty big. So I have to put things in place to make sure I don't go and ruin myself. Somebody else can sit there and say, "Oh no, if you want to make big picks, you got to be in it, but you got to be in, put the time in." And they're right, but I'm just not willing to go through that. Hopefully that answers what you were saying, TRO. If not, direct me.
Well, I was looking at the chart when you were talking about fibs, and one of the things it comes up with the flip flop, and if you would have taken the monthly flip flop box to the north, you'd be up 172 pips right now.
Yeah.
It's just funny how these, that sometimes you use something on one time frame, and then you look at it other time frames. It kind of shows you whether or not it's robust.
Right, and you'll find, you'll find that most of these methods that we talk about, they work on every time frame.
Yeah, the weekly you'd be up 329 pips right now.
Yeah, exactly. The only thing that may change on it is that and it has to be put into the calculus of all of it, and that is you have to go and do the research of figuring out, okay, I want to go and do this on a monthly. Well, guess what? When I'm sitting here doing this on a 1 minute candle, my stop loss is pretty tiny. It's 3-4 pips. That's all it is. It's 3-4 pips. But if I'm doing that on a monthly, shoot, I had a friend of mine used to go and say, the pound dollar will hiccup 3 or 4 pips, because he always traded off of the weekly and the monthly chart, and he was right from his perspective. It hiccup, it sneezes and it's done that. So so that was, you got to figure out where your stop loss is going to be and put it far enough away that you're protected and give you a better chance of winning.
You just broke that flip-flop box to the south side there in the 1 minute. And you know what? The fastest...
We're out of time.
fastest 15-minute in trading is just about over. But look at that nice edge that this trade put in. You could have shorted the 10% Fibonacci, the 23%. There's just all kind of trades. Just pick your trade. But that's what you have to do, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpledone, over and out.